Welcome to this week's webcast for Realty Times. I'm Leanne Locken.
And I'm Derry Hayes.
This week, Capital Economics raised its 2013 forecast for home price increases after the S&P Shiller Home Price Index reported the housing recovery is spreading throughout the nation.
It is. In the city report, we'll focus on Louisville, Kentucky, where bourbon is literally the toast of the town's redevelopment effort.
We also have the latest mortgage rates, and in the advice segments, well, we'll explain why first-time buyers had better get a move on if they are serious about owning a home.
Yes, for sellers, we've got some sample questions that are like truth serum when it comes to learning if a potential real estate agent will be on your side.
Oh, that sounds good. Well, we better get started now with the news. After Capital Economics got a look at the latest S&P Shiller Home Price Index, the HPI, Capital Economics raised its forecast for home price growth 2 percentage points from 6% to 8% for 2013.
Yeah, now that's a big move. Capital Economics' revised forecast comes after the S&P Index for January revealed home prices overall have now risen year over year for each of the past 12 months.
And for the first time in more than 2 years, all the metro areas in the S&P Index saw year annual price growth. New York had been the only holdout with 28 consecutive months of negative annual returns.
Now that indicates the housing recovery is not only sustainable, but also spreading throughout the nation. And both the S&P composite indexes are back to 2003 levels.
Home prices for the S&P Shiller 20-city composite rose 8.1% over the past year, and home prices for the 10-city composite rose 7.3%.
Capital Economics says a decline in new home sales in February shouldn't cause concern about the recovery after January's strong 13.1% month-to-month increase in new home sales. A month-to-month decline was expected.
Capital Economics is also bullish on the housing recovery because the supply of new homes is increasing and helping offset the short supply in the resale market.
Well, you won't get an argument from David Blitzer, chairman of the Index Committee at S&P Dow Jones Indices. He says economic data also continues to support the housing recovery.
Blitzer says single-family home building permits and housing starts posted double-digit year-over-year increases in February. There was a slight uptick in foreclosure filings, but the numbers are still down 25% year-over-year.
The cities where the recovery is the strongest include Atlanta, Detroit, Los Angeles, Miami, Minneapolis, Phoenix, and San Francisco. All reported double-digit annual home price increases.
Capital Economics says more positive news is coming from lenders where there's a small but gradual loosening in tight credit conditions.
We do need home loan money to keep this recovery going, though.